very welcome to this video in our series on Unit 4 for Leaving Certificate Business. And in this video we're going to look at the steps that are involved in taking out an insurance policy, and within that we're going to learn about the difference between the terms underinsured and overinsured, and the difference between insurance brokers and insurance agents, what's meant by a proposal form, and the difference between a certificate of insurance and an insurance policy. So, firstly, let's look into the steps involved in taking out an insurance. Well, firstly, we'll look at each of these in more detail now over the next few slides, but you need to figure out what type of insurance you need, get a value for the item, see how much it's actually worth, go to your insurance company or insurance broker and get a quote, fill in the proposal form, which is like the application form, then decide on which company you want to go with, pay the premium, or in other words, the cost of insurance, and then the insurance company will send you out the insurance policy and the certificate of insurance. That's it. Simple as, you know. So now we're going to look at each of those in a bit more detail. Okay, so decide what type of insurance you need. So basically what we mean by that is that if you're regardless of your business or household, there's going to be various risks involved in your day-to-day life. So therefore, you need to identify what those risks are, usually as part of a risk management process that we talked about before, and identify which risks you need to get covered by insurance, and find out which policy you need to cover that particular risk. Okay. Once you've identified what the risk actually is, then you need to get a valuation of the item you're insuring. Okay. This is important to make sure that you don't overinsure or underinsure the item in question. Basically, it's getting a valuation for it. So if you're getting home insurance, you need to find out what the value of the home is. If you're getting car insurance, you want to know roughly how much the value of the car is. That's so that the insurance company can make a calculation as to how much they're actually insuring the item for. Now, what do you mean by underinsured? Well, it means the business or person has inadequate insurance cover. In other words, they have taken out an insurance policy but haven't insured the item to the full value of its worth. So if there was a claim, then you're not going to get the full item replaced. The insurance company will only give you compensation, in other words payment, for a percentage of what the value is worth. So whatever percentage you claimed it to be worth at the moment. So let's say, for example, you have a car that's worth let's say you have a house that's worth 500,000 euro, for example, but you only get it insured for 400,000 euro. So therefore, you're only getting insured for 80% of its value. Then whatever losses you incur, they're only going to give you compensation for 80% of the loss. Okay. Overinsured, then, on the other hand, is when it's the opposite way. Okay, when you've taken out insurance for more than the item's actually worth. In the event that you have a loss or partial loss, then remember you're not able to profit from insurance. Remember from our principles of insurance, that relates to the principle of indemnity. So even if you're overinsured the item, you will only actually receive the max value of the item, and that's actually it. So, on to the next step is on contacting an insurance company or insurance broker. So, once you've the valuation, you go to the insurance company or broker to get a quote for what you want to get insurance on. Okay, it's important when you're getting a quote that you give all the relevant information, otherwise your quote's going to be inaccurate. Okay, now question is, what's the difference between an insurance broker and an insurance agent then? So an insurance broker is someone who goes off on your behalf and collects quotes from a lot of the different insurance companies and try and basically get the best deal for them. How did the insurance broker make money? Well, they get what's called a commission. Okay, so a small percentage of the insurance fee from the insurance company, and they may or may not charge the consumer or the customer a small fee for the broker service as well. But the advantage of the broker is that it saves the hassle of you having to go to different insurance companies to get quotes. They do it all for you, and then they come back to you with the options for you. And sometimes, because brokers are doing this to several companies, can often get a wholesale rate, so a cheaper rate than you will get if you were going into the shop itself or the insurance, ringing the insurance company yourself. Insurance agents then similar, but they only work for one particular insurance company and only sell that company's policies. So they would there, for example, let's say for example someone worked for AXA Insurance, for example, an agent working for them would pick out the best policy from AXA's range of policies, for example, or it could be any insurance company. I'm just using them as an example. Now that the next thing is that you've got your quote, you're filling in a proposal form. So you've got your quote, you figure out the one you go with. Proposal form is basically your application form. Okay, you're proposing to get insurance, basically. Okay, these apply for insurance, and the company is given full particulars, so in other words, full details of the risk against which the insurance protection is desired. Insurance proposal forms help the insurance company calculate the premium based on all the potential risks in relation to the insurance policy. Basically, your proposal form is all the information about you and the item you want to get insured. With this information, it's important you have to be honest about it, which is the principle of utmost good faith. You have to be honest about all the information there so they can calculate whatever the level of risk is going to be, and therefore your insurance cost. Next up, you decide in the company and you pay the premium. So basically, you decide what you're going to do based on the price of the quotes and the level of cover being offered. Then whoever it is, the business, the person is going to pay a premium, pay the insurance price. The price of insurance is called a premium. Don't forget that. Okay, and that's an important word to know. And last but not least, then, okay, now it's back over to the insurance company. They're going to issue what's called the insurance policy and the insurance certificate. Okay, they do this once they receive the insurance premium from the customer. Now, what are these documents? Well, the insurance policy is what, now this is your definition here. It's a written document from the insurance company containing all the details, terms and conditions of the insurance contract, whereas the certificate of insurance is a short little written summary of the main points of the policy. So for example, in car insurance you often have your little disc, okay, that can be that you put in the front of the car. That's often known as your certificate of insurance, whereas the insurance policy then is actually the full detailed document that you don't bring out in the car with you, which has all the actual proper details about your insurance. So that brings us to the end of today's video, where we've learned about the steps involved in taking out a new insurance policy, the difference between being underinsured and overinsured, the difference between insurance brokers and insurance agents, and what is meant by a proposal form, but last but not least, even the difference between a certificate of insurance and insurance policy. Hope you enjoyed the video, and if you did, give it a like. If you have any questions, ask below in the comments, and of course, please subscribe to the channel as well. I'm not far off 1,000 now, so go on, hit that button in the middle, please, pretty please, please. Thank you. See you in the next video. Bye now.